G'day everyone, welcome to this global update for the 30th of November. And last week, in fact for really a fair bit of the last few months, we've seen Europe heading further north, China's stock market doing terrifically well, the Japanese stock market going north at a great rate, the American market obviously progressing very well. But the Australian market is clearly the big underperformer, and that really accelerated during last week with a real crunch on commodities. And as I've been saying for some time, the change in commodities is not a short-term cyclical situation where commodity prices are oversold and they're going to bounce back. This is a structural change because there is far more supply than there is demand. So commodity prices are going to stay where they are or perhaps even trend lower for quite a long period of time. And I'm talking a number of years at least. So that's really weighing on the Australian stock market. It's also weighing on the Australian dollar. So let's have a look at what happened last week. In America, it was a shortened week, only 3.5 days of trading with Thanksgiving on Thursday and then a half session on Friday night. The S&P index gained just 4 points on the week, but still looks pretty strong. No real evidence of any selling pressure there. And the Nasdaq, which tends to lead the way, was powering ahead and in fact gapped higher on Friday night. So very impressive performance from the Nasdaq, and that certainly points to a continuation of the rally in America. Now, I'm not saying that it will happen, but the week after Thanksgiving often sees a dip in the market. So strong week into Thanksgiving and then a dip afterwards. So there may be a better opportunity for entries into the American market next week. However, if that occurs, or whether it occurs or not, the fundamentals support an ongoing medium-term uptrend in the American market. It really is the best of all worlds at the moment. Now, just have a quick look at the European indices and then we'll go to the charts. The German DAX is back near all-time highs, and my goodness, how much that's turned around in just a few weeks since the ECB again said that they would do whatever it takes. So we were clearly in a phase 4 decline. It had ticked all of the boxes that I look for, but the ECB has stepped in with more monetary stimulus and has just absolutely killed that pattern. And we've got a situation in Europe now where bad news is seen as good news because people are thinking, well, if the news is that poor with respect to economic growth, then the ECB is just going to pour more and more money into the system, which is leading to asset inflation, particularly in stocks. So the bad news is being seen as pretty rosy. The FTSE ended up flat on the week. So let's have a look at a few charts. We'll start with the S&P, and it's just been an absolutely miraculous resurgence since that early October bit of a meltdown, which I have suspicions about. It certainly wasn't based around fundamentals, and still really no sign at all that this US rally is coming to an end. Let's have a look at the Nasdaq. You can see the Nasdaq even stronger and actually gapped up on Friday. So closed the week in very, very powerful fashion. If we look at the German DAX, it broke key support. The moving average was rolling over. The index was below the moving average almost 100% of the time. Just an absolutely classical move into a phase 4 decline. But the ECB has certainly dented that party, and it's just rocketed back up close to 10,000 points and the all-time highs. So that's about the long and the short of it in Europe. The UK hasn't quite made it back to those all-time highs, which is quite interesting because the UK economy is going much better than Germany, and yet the German market is running harder because of stimulus. So let's have a look now, turn to the Australian market. The ASX 200 index gained 9 points on the week. That will certainly disappear on Monday. The oil stocks, Woodside, Santos, are going to get smacked. BHP is going to be smacked. At this stage, I don't know whether there was any movement in iron ore or not on Friday night, but certainly the weakness in copper, the weakness in oil is certainly going to impact on BHP and to a degree on Rio as well. So I think we'll see the ASX 200 down on Monday. I think the futures were pointing to probably about 60 points lower. That means that all of the gains for 2014 have now disappeared on the Australian market, and that really does tell a story when you look at the other markets. Now, some value will reappear when, some of the good stocks, some of the top 10 or 20 stocks that are always supported for their dividend yield, some value will reappear, but as I said last week, it's just really hard to feel confident about the Australian market at all. And my strong recommendation is that you avoid at least 98% of the local market. There's a few stocks that are okay, but you can count them on one hand. There's probably 50 or 100 good solid businesses, but most of them that are going well and that you could really feel confident about their future earnings growth are actually fully valued to overvalued. So you don't want to actually be buying them. So there's actually very little to shoot at in the Australian market. And you just want to give commodity stocks an absolute big miss at the moment because all the factors are towards US dollar strength, and that's negative for commodities. We'll have a look at the Australian index in just a minute, but let me touch on gold. Friday night, gold fell apart, partly because resistance managed to hold, and also the US dollar strength caused some selling in gold as well. So it was looking good up until Friday morning, and then gold has really slipped back to 1167. So unable to break through resistance, and as I expect US dollar strength is almost certain to continue, I think you've just got to step aside from gold and from energy stocks and from pretty much anything related to commodities. So we've got major support in gold at 1,025, and then if that happened to break, then look out below because there's really nothing for another couple of $100 down to 850. Now the stock indices, as we'll see, the gold stock indices rallied back to the breakdown level. So they break a key support, they rallied back to that support, and then they turned down sharply on Friday night. So it's not a good situation for gold stocks at all, I'm afraid. Let's have a look at some of those charts. First of all, we'll go with the Australian index, the ASX 200. So if we pan back and identify where we were on the 1st of January. 1st of January is here. So that's the line we're at. So we are basically a few points now. So all of the gains that we had for most of 2014 have now disappeared with that sharp sell-off on Friday. And I expect that we'll see another red candle of similar dimensions unless some unexpected support comes into the market, but you can expect to see all the major resource stocks hit fairly hard on Monday morning. Now turning to gold, if we have a look at gold on a big picture basis, this is a weekly chart. I've stripped away a lot of the other things that I normally have on there, so you can see big picture. We're still in a downtrend. We broke important support, which was here. So around the 1200 mark. So we broke that support, then we rallied back to it, and now it's turned over again. Let me zero in a little bit further. Now bear in mind this is a weekly chart, but you can see it managed to scramble just a few dollars above that previous support, which is now holding as resistance. So the next level down, 1025, and then below that it gets pretty ugly. So that's just the situation we're in with gold at the moment. Now just looking at gold stock indices, it's a very similar pattern. You can see we broke a key support level on the GDX index at around 20. We went down to 16 and a half. We rallied back to that level, which is now, that support is now flipped over and become resistance, and then you can see it all fell apart on Friday night. So really poor signs at the moment for gold. In fact, for all commodities. Copper also broke down. I've been speaking about copper breakdown for quite a few weeks now. It managed to hang up there for a little bit longer, but I always said it looked shaky, and it broke down sharply during the week down to 292. So that important $3 support level broke. And oil got absolutely killed with the OPEC decision. And they're not meeting again until June of 2015. So unless there's an extraordinary meeting amongst OPEC ministers, then crude oil could be heading lower. So we were 76 last week. We've absolutely fallen apart to 66 in the last two trading sessions. And the possibility of oil heading down to 50 or below has to be realistically looked at now. So you really want to stay clear of energy stocks as well, because there's just no telling where oil might find a base. The Saudis are clearly not wanting to just step back and allow the American shale oil producers just to come in and steal part of their patch. So there's, as we've had a currency war for the last 4 or 5 years, we've got a war in iron ore, we've got a war in oil. These are all just areas that you've got to avoid. This is the spot copper chart. It's a little bit hard to see right over on the right-hand side of the chart, but we had important support at $3. Yes, we had a downtrend that started in July, and I said that it looked pretty shaky. Well, it just fell apart over the last few days of last week. So signs not good there for all commodity classes. So overall, the currency trends, the fact that the Australian dollar is heading lower and all the factors would indicate that it's going to head lower still, it really makes exposure to US stocks a no-brainer. Now, I've been on about this all year, and I correspond with, obviously I correspond with all of the Specialist Share Education members, and I'm pleased to say that the vast majority of them have moved funds and activity to America. But I also correspond with non-members, and most of the time I just get, a blank response when I talk about trading in the US. I don't know why it is so hard for some people, but it's just an absolute no-brainer. Australian stocks are really struggling. American stocks are going ahead gangbusters, and people that move their money to America from around parity down to where it is now have just made an absolute killing on the currency as well. So they're getting it from both directions. So to me, I just don't understand the reticence to go into the US market. It just makes no sense at all. So from my perspective, I would be avoiding most of the Australian stocks unless you are shorting the market, which is dangerous unless you know what you're doing. But there's just so many stocks in Australia that are in downtrend that there's very, very little that I would be buying at the moment. So that's the rundown for where we are. For anyone who's a non-member who wants to converse with me about their trading or their investing, the business that I run can make a significant assistance to you in getting started the right way or getting back on track. There's my email address. If you'd like some assistance with getting back on track, then please get in touch with me. That's it for this week. Cheers.